Hey everyone, and welcome back to the channel. Today we're diving into Ehang's latest financial results for the first quarter of 2025. The company has just released its earnings, and there's a lot to cover. In this video, I'm going to talk about the declining revenue they've just reported, regulatory milestones, expansion plans, and at the end of this video, I'm going to talk about something we need to consider regarding to Ehang valuation. Everything I say is not a financial advice, so please make sure you do your own research. In the first quarter, Ehang delivered 11 units that led to a total revenue of about $3.6 million, which is a sharp decline from both the previous quarter and the same quarter last year. Despite the lower sales, Ehang improved their gross margin to 62.4%, and the company says that's because they have higher average selling prices. Now, operating loss got worse as well, and it's now $12.4 million. And also, net loss got worse as well. According to the management, a big part of this drop is due to timing. Customers were waiting for regulatory approvals, which only came at the end of March. So the management says that's why the revenue and the profit came so low. Now, when it comes to regulatory news, their EH-216 drone just received an air operator certificate, and that's the first time pilotless passenger drone have been cleared for commercial operations in China. Also, two operators, including Ehang's, are now licensed to fly passengers. At the beginning, they are going to aim for isolated places just for tourism, and down the line, they are going to expand and to offer services for passengers. This is a big advancement not just for Ehang but for the entire urban air mobility industry. Now, looking ahead, Ehang is making real progress when it comes to their new prototype of VT30. That's a model that is already in flight testing and designed for a longer range compared to their old version. The company said they are going to roll out this type in the third quarter this year. Now, when it comes to production, Ehang is expanding their facility and they're doubling their capacity. They plan to have a capacity of 1,000 units by the end of this year. Also, Ehang is working with their infrastructure partners to build vertiports, which are landscapes that the drones will be able to land on. And on top of that, they've just partnered with a university in Spain which develop flight safety tech, and they're all about low altitude economy. Now, Ehang finished the first quarter with $153 million of cash balance. That means they still have some cash to go, at least for the short term, maybe let's say a year, but we can't say for sure. As for the guidance, they're maintaining their fully revenue target, even though they just reported $3 million of revenue. They still say they are going to reach $125 million of revenue for this year, 2025. That means the company expects to sell many drones in the next 3 quarters. So on one hand, the first quarter numbers are disappointing from a revenue and profit standpoint, but on the other hand, the company hit regulatory milestones and unlocks commercial operations. So next quarter is going to be crucial for investors to see if sales are going to recover or to stay flat like this quarter. The last thing I want to say before I wrap up with this video, Ehang market value as of today is about $1.1 billion. If we take, for example, two competitors of Ehang, those will be Joby and Archer, both of them located out of China, while Ehang is located in China. Joby and Archer market valuation is about $6 billion each. The interesting thing to consider is that Joby and Archer haven't started selling their products yet. They haven't delivered even one single unit. From what I know, they're still in the process of passing the regulation. In a complete contrast to that, we have Ehang. Ehang already started selling their products, they already passed the regulations, and they already had a revenue of $60 million last year, and they sold over 100 units. So it seems like Ehang is at a more advanced phase in comparison to Joby and Archer. And still, Joby and Archer worth 6 times the value that Ehang is worth. So this is not uncommon to see. Usually US-based companies will be evaluated at a higher valuation relative to their competition in China. And I think that's the main reason for Ehang to be looking now for secondary listing. They're looking to list their shares in an outside of the US exchange, and that's because their shares are not being appreciated on the US exchange. So the final conclusion is Ehang valuation is lower than its competitors because Ehang is a Chinese-based company, and for investors that means more risk. So they are willing to pay less on Ehang relative to how much they are willing to pay on similar companies that are located in the US. There might be additional risk over here because Ehang got sued lately for inflating sales, and as I understand, at the moment they're still in the litigation phase, so there is still risk to consider, and that might be factor in the price as well. So for now, we're gonna have to wait and see how things will evolve, but it won't be boring, that's for sure. I hope you enjoyed this video, and I'm gonna see you in the next one.